it's the moment some would argue that we've been waiting for, not 2 years, but more than 2 years now. GST could finally see light of the day. From a market standpoint, this is a mega reform. This is a path-breaking reform, a reform which promises to change not only the entire indirect tax structure of India, a reform which automatically will add productivity, the ease of doing business will increase, and also for FY17 and FY18, we may see a big bump up both for GDP estimates and for earning estimates. But from a market standpoint, what are the other pitfalls? The challenges in the short term, GST is a good destination, but in the short term, the implementation really could be a big and a very, very long drawn process.
Yeah, and the key question, of course, to ponder is whether or not the market has priced it in. And if not, how long will it take for the market to digest the dynamics and the impact of the implementation of GST from April 1st come next year? And more importantly, does this really change the landscape and the kind of magnification with which the FIIs now look at India? And this, forms crucial importance at a time when we've seen a gush of liquidity into Indian equity markets, and we're already sitting at that 8,700 mark. So try and put this all together as to what GST really means for the market as it gets set to be tabled in Parliament day after. Nilesh Shah, MD Kotak AMC, joins us on the show. Also got on board Vikas Khemani, President and CEO at Edelweiss Securities. There's also Pankaj Sharma, Executive Director at Equirus Securities. But Nilesh, let me come to you first, really. And, the first question that we're pondering about is how much of the positives of the GST are already in the price and already reflecting now on the market ticker?
In the recent run-up to the market, it will be fair to assume that almost 70 to 80% probability of GST passage has been factored in. We also believe that clearly market is cognizant of the fact that GST is a game changer. It's probably the most significant taxation related improvement which we will see in some time, and hence it has really improved the sentiment or the valuation of Indian market.
Because how much probability do you think markets are factoring in that GST will be passed on Wednesday, which is where we understand it would be, the bill would be debated? And from a market standpoint, how much of the GST is in the price?
So I think it's one of the most awaited reform for quite some time, and based on whatever we are hearing from the government, and it looks like there is 80-90% probability that it will be passed, and obviously we'll have to wait for the outcome, but it looks like there's a high probability right now it will be done. And markets, I guess, have factored in quite a bit of it, so we may not see an immediate run-up if it happens. If it doesn't happen, then there will be definitely disappointment, because I think quite a bit of GST passing through has been factored in by the market.
Pankaj Sharma as well with us. And Pankaj, the same question to you really. Almost a touch and go moment with that 8,700 mark today. Is the street at all beginning to price in the impact of GST, or do you think they're going to first see the bill getting resolved in Parliament and only then take some action?
So I think I would take it like this, because in my view it's almost 100% probability market has factored in the bill will go through. But in case it doesn't happen on Wednesday, there would be a disappointment. So I don't think anything in terms of a positive reaction immediately we would see if the bill goes through. But if it doesn't happen, then there could be a downside.
The general sense is that GST will see light of the day, and it will become a law on Wednesday. That's what markets are working with. But GST will have far-reaching implications on the entire, on some of the key sectors: autos, logistics, the multiplex industry. Positive for them, but negative for cigarette, alcohol, and the print media. So in terms of the fine print, in terms of a quick sectoral analysis, let's go to Ajay.
Well, Nikunj, the 2 or 3 biggest beneficiaries of GST actually are some of the consumption-related sectors. As you just said, autos is one very big space, and auto ancillary, because of the kind of current tax rate which they have currently around 26-27%. Anywhere around 18% if the tax rate falls, this will start aiding their impact profitability a whole lot. Same is the case with FMCG sector. Currently, the tax rates are 25% upwards depending on what product you're talking about. Suddenly, there will be a big fall, and again, the earnings get boosted. Same is the case with, in fact, multiplicity of taxation is the biggest issue with the logistics sector. Of course, that goes down, and hence the productivity increases. So, logistics, consumer sector and automobile are the biggest beneficiaries as far as the GST is concerned, and since they have a large weight as far as our listed indices are concerned, that also are likely to impact the 1 year forward earnings and hence the market. In terms of negative growth, negative earnings impact, it's the telecom and pharma sector which get hit, but that actually gets more than made up for the benefits which GST will actually bring for the economy.
Indeed. Nilesh, and just a derivative of that point, how big a deal would GST be for Indian markets as opposed to other reforms which have been taken so far? How is it going to be different?
So essentially, if we see what ails our economy, the one big thing which ails is that the taxation burden is not distributed equally. Our tax to GDP ratio at around 10% remains one of the worst in the world. Second, within that low tax to GDP ratio, the burden is borne maximum by salaried employees rather than businessmen and traders. We all know that there is a parallel economy which does not allow appropriate tax collection. This keeps government coffers empty. They are not able to invest for future in terms of infrastructure, healthcare and so on and so forth. The second problem which ails Indian economy is inefficiencies. Our truck run average of about 280 kilometers a day, even though our truck drivers work much harder compared to, let's say, American truck drivers, which clog about 700 kilometers a day. Now, partly my trucks are running at a lower speed because the capacity is smaller, the road conditions are worse, and also there are far more toll collection booths than probably we will see in US roads. But this kind of inefficiencies gets inbuilt into our economy and makes us uncompetitive vis-a-vis rest of the world. GST, what it tries to do is to distribute burden of taxation equally, like service tax. We have seen stupendous growth in service tax vis-a-vis excise and customs. GST will be something like that. By equally distributing tax and giving more tax revenue in the government's coffers, it will allow government to spend money on infrastructure, healthcare and future investments. It will also help us rid our inefficiencies through logistics. So all these things are which will benefit our economy over a period of time.
Now, Vikas, ultimately it's all about the GST rate. The assumption is that the aggregate rate will be late teens or not beyond 21 or 22%. So how much are you factoring in revenue neutral rate for GST to become attractive?
I think what we hear is about 18% is the rate which is being talked about, and we'll have to wait and watch. It's all sort of guesswork right now, but based on whatever interaction we hear from government and other participants, I think government, it is expected to be about 18%.
Nilesh, the other fact is, how much can GST boost EPS estimates for FY18 and hence an impact on valuations? Could we look at a significant re-rating of Indian equities when it comes to earnings?
I think we are not yet in a position to predict the impact on corporate earnings in FY18 courtesy GST rollout. Partly we don't know the nitty-gritties of GST yet. What will be the base rate? Will it be 16, 17, 18? We have no idea. Unless until we know the fine prints of GST, it will be difficult to calculate what will be the impact on corporate earnings in FY18. The second thing which we need to learn from experience of GST rollout in other parts of the world, that when it is rolled out, it invariably creates a disturbance in economy. The new business model in terms of logistics starts working out. The stockists and distributors have to get used to the GST regime. They have to invest in IT infrastructure. All these things may result into an adverse impact on FY 2018 earnings, which is possible because of GST rollout. So I don't think so today we are in informed position to take a call on impact on the corporate earnings in FY18.
Because which is the top sector that you think will benefit because of the passage of GST, and why is that?
So I think if this is passed, anything which is selling across the country will have a huge benefit. So whether you talk about, I think this GST will have impact on all sectors of the economy, either directly or indirectly, and specifically it will have impact on the sector where unorganized part of the economy is fairly large. So you will see with this the transition from unorganized to organized in a big way. So I think whether it is all consumer product company to building materials company to textiles to so all sectors of the society, sort of industries where there's a all round the multi-state trade, you will see a big benefit, and I'm quite positive that this will definitely have an impact on the economic growth of the country.
Pankaj, GST will not get implemented in a hurry, and in all probability the implementation will only happen in calendar 2017, and then there would be a teething problem, which means the real implementation is at least 18 months to about 20 months away. So why are markets getting excited for an event which will go through its process of adjustment, which is still 2 years away?
I think that's a very good question, Nikunj, because I think that apart from the tangible impact which GST would lead to, and in my view, first couple of years would be difficult. They would not be easy in terms of how the impact would look like, depending on the rate, depending on the implementation methodology, everything. But I think why the market is getting so excited about this event is that it gives a signal about the direction we are taking on the reforms which are structural, which require a consensus, which require involvement of the state. As you have seen that despite having a 50% plus majority with BJP alone, NDA was not in a position to get this bill passed. You have to get Rajya Sabha on board, you have to get states on board. So this is something which is more difficult, more challenging, and more structural in nature, and the impact can only be seen in a matter of 10 to 20 years, how things would improve, how things would look like. And I think something which Mr. Shah pointed out, that it's a very pertinent reform and very pertinent question, that whether this will lead to at least some impact on parallel economy and making things more mainstream. So I think this is linked to more structural factors, despite not seeing anything significant and tangible in EPS in next 12 to 18 months. This is a very, very good thing structurally. So that's why perhaps the market is getting more excited about the confidence it will have in the government's ability to get reforms done.
Yeah, indeed. Okay, on that note, gentlemen, stay with us. Going to take a very quick break, and when we come back, another special voice, Samir Arora from Helios Capital as well, joins in all the way from Singapore with his thoughts on GST and how it's likely to impact the markets.
Well, it is the big reform which markets have been awaiting, and frankly markets have been awaiting for this moment for more than 2 years now. The maths is out that how the projections will change for FY17 and FY18, but in the near term, the point what we need to address is that is the GST built up slightly ahead of the time? Implementation, a challenge. In the short term, there would be a revenue loss, difficult to capture that. And then whichever unorganized sectors which will move towards organized, on a long-term basis, this is great news. But in the short term, the parallel economy obviously will take a huge hit. And Pankaj, that is my question. On paper, this is a great migration. We cannot argue. But in the short term, the parallel economy will take a hit. And when the parallel economy will take a hit, the impact on the aggregate economy during the adjustment process could be very sharp.
I completely agree. I think that this is something which is a challenge, but unfortunately is something which is inevitable. Whenever you move from a phase which would have large unorganized presence to a phase when the unorganized sector's presence will come down, in that case there would be a transition period which would be painful, and that is something which probably market has ignored. There would be a time, 18 to 24 months at least, when things would not be as smooth as we are expecting them to be, and that is something which could be a negative. But overall, transition phase is always painful when you are making that transition in a complex country like India. So something which is completely I agree with.
Nilesh, the same question to you. You know, there is this whole talk about what the revenue neutral rate is going to be and whether or not it's going to get is going to turn out to be beneficiary for markets or not. What should be a fair revenue neutral rate in your view?
I really don't have that kind of calculation. What we need to ensure is that while we need to simplify our taxation laws, we also need to ensure that there is equitable distribution of taxation burden on all the segments of the society. GST should create equitable distribution, and that itself will allow them to reduce overall base rate.
Right. So, Nilesh, how much time does it take for the rollout and then for implementation? The IT backbone has been ready. You cannot press the go button and implementation will start tomorrow morning. This is a long drawn, complicated and a rather tedious project.
As far as our understanding is, once Rajya Sabha clears GST bill, it will go to states for their approval, and majority of states have to approve it. And thereafter it will go into nitty-gritties in terms of rollout and stuff like that. Typically, most of the finance bills are made effective beginning of New Year, that is 1st April. So there is a reasonably good chance that by 1st April 2017, we should be in a position to roll out GST with all the nitty-gritties. It will obviously involve investment in IT infrastructure. We'll have to burn a lot of midnight oil to ensure that our IT infrastructure is up and running to capture the benefits of GST.
Pankaj, let's nail it down to one or two names which will now qualify as GST winners. I mean, you should buy these stocks with the assumption that GST will be implemented, and eventually when the implementation will happen, the earnings trajectory could change for them and they could be the real game-changing GST gainers.
Yeah, I think the most prominent names which we think will benefit is Symphony. Let's say when we look back 15 years back, 20 years back, there used to be a huge unorganized market for products like even desktop computers, air conditioners. But how things have changed in the last 15 years that you are almost buying everything in branded market. Similarly, you see the air coolers market. Today there is a huge unorganized sector in this market. We believe that a company like Symphony would benefit significantly from this, because as unorganized sector comes down in air coolers, it would be a great time for Symphony, and that is something which will be very, very good for them. So I think Symphony is the most prominent name I think will benefit. There could be other names like there is a huge unorganized sector in replacement market for batteries. So one of the beneficiaries could be Exide Industry also. But then of course the FMCG names like Britannia and others, Havells, these are the guys who would benefit. But overall, in terms of you have to just pick one name, it would be Symphony.
Nilesh, just another key pertinent point. While Vikas here believes anything and everything that gets sold across India is going to be a beneficiary, but your understanding really of which sectors and sections of the economy would be the biggest beneficiaries?
I think from a market point of view, there will be sectors related to, let's say, complete outsider like logistics, which will benefit because of the implementation of GST as companies create more efficient logistics solutions. It could also benefit those sectors where the current taxation rate is higher than what is prescribed in the GST. It will be adverse conversely to those sectors where the current taxation structure is lower than the GST rate. So there will be sectors like automobile, white goods, consumer electronics, which may benefit because their current taxation rate is likely to be higher than the GST rates. More importantly, the benefits of GST is not going to be just from the direct implementation, it will be also via the indirect implementation. So if the government revenue goes up because of the GST implementation, they'll have more money to spend on infrastructure, they'll have more money to spend on healthcare. So even those sectors will ultimately benefit with GST rollout.
Okay. Pankaj, Nilesh, Vikas, gentlemen, appreciate your time and thank you all for joining us. And before we wrap the show, here are also some thoughts from Samir Arora of Helios Capital, who believes that GST is the single most differentiating factor from an India standpoint. It may not change life in the short term, but for a long-term watcher, this is a big breakthrough, a big reform which everybody was anticipating and waiting for.
Government's effort in the last 2 years finally seems to be converting into businessman seeing an order and seeing some business. And also, there seems to be definitely a TINA factor that with India doing relatively well, its currency stable, having survived Brexit with dignity, so that it didn't scare anybody. A positive performance leads to further confidence in the minds of the investors. So right now it's all pretty okay. And monsoons are on track, and we hope that GST will at least get cleared. The only thing is, in the last 1 or 2 months, the market has been up a lot.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.